Welcome to PerfectVariableAnnuity.com. I'm your host, Jim Farish. I'm the actually editor of this site and creator of this site from the standpoint that we've looked at, variable annuities for a long time. This is my 31st year of working as an advisor. And one of the things that we continue to find out is that there's so much trash out there that's created by the financial services industry. And for a long, long time, we really have ignored the annuity market. It's not something that we enjoyed. It wasn't something that we believed in. And the more we've run across people and speaking around the country and talking with investors, it's really a shame that there are today, on average, over $1.5 trillion in assets, really, I almost say trapped in variable annuities. And yet the continued selling rate of these things continues to escalate. The numbers that we've seen for Q2 of 2011 was $62 billion, which happened to be a record quarter. I've seen preliminary numbers on quarter three are telling us that those numbers are going to eclipse $75 billion in Q3, which means we're running at a run clip of close to $250 to $300 billion a year just in variable annuity products alone. And that's quite a staggering number when you put it in perspective that mutual funds have just over $3 trillion in assets, and you continue to see the proliferation of what's going on with variable annuities. So we created the website as a tool. We created 6 objectives of a variable annuity. We've given you, if you're obviously on objective number 3, and if you haven't listened to objective 1 and 2 about setting and having a simple goal relative to the asset, actively managing your money, which we talked about in 2, then maximizing your income may seem a little bit out of place, but that really is interesting to me. The reason I added this as objective number 3 is not that I believe that's what what a variable annuity is all about. A variable annuity is about what we covered in objective number 1. It's about tax-deferred growth for future income. And when we look at now, we're at the future, let's say we got in our time machine and we went forward, we have the assets accumulated. Now the question is, how do we accomplish maximizing the income? It's not with a variable annuity. It could be from a standpoint that you could manage the money within the variable annuity to generate income, but that's really not what the variable annuity was ever created for. If a broker or a advisor or an insurance agent convinced you to buy a variable annuity today and or any time in the last few years based on the premise that it would maximize your income, that really isn't the objective. The objective of a variable annuity is equity participation in the markets. That's what it's all about. It's about investing and putting your money at risk. It's not about how do you get guarantees. You want guarantees, you got to go to fixed annuities from my view. And why would I say that? I think first and foremost, if you go to objective number 5, the fees are just too high. And objective number 4, we talk about beware of riders because the fees are too high. I'm not going to get into them because you can go listen to those videos and understand what we're talking about. But here, I want to talk about managing and maximizing income. And so if we went back to objective number 2 and said that, the whole role is to actively manage your money for growth, then that to me is very key. So I want to throw out just a couple of ideas here on maximizing income, and that if you're managing your money for growth, take the growth and lock it in. In other words, let's say you have $1 million that you put into a variable annuity contract and it grows by 10% and you get $100,000 of growth. You can actually do a partial 1035 exchange, flip that into a single premium immediate annuity, and start that income stream immediately. In other words, let's say that you're age 70 and or you're 60 or whatever, you just flip it in. It's going to turn on the income, and you start the income stream immediately. Let's say we go to year number 2, and it earns 8%. Take the $80,000 and flip it out into a single premium annuity. And in year 3, let's say it earns 12%, so you earn $120,000. Flip it out into a single premium immediate annuity. In other words, what you're doing every year is taking the growth and converting it to income. And you convert the income over a 10-year period. Let's say you do it from age 60 to age 70. At the end of the 10 years, you still have $1 million inside the variable annuity. And if it averaged out at 10% over 10 years, you would have $1 million in single premium immediate annuities that are paying you an income. Let's say they average $700 per month per single premium annuity. So you have 10 of those. 10 times 700 is $7,000 a month that you would have accumulated in income. So you would have laddered your income stream out, plus you still have the $1 million. To me, that's just a unique way that you can convert or maximize your income from a variable annuity. Can you leave the money in the annuity? Absolutely. You can compound it out and let it grow out to $2 million and then convert $1 million to income into a single premium immediate annuity 10 years down the road and turn that income on for you at age 70, and that may be the way you want to do it. All I'm saying is that, plan the income. In other words, we're talking about future date income planning. We're talking about whatever. You're 65, you want to start income at 70. You're 62 and you want to start income at 65. What amazes me many times is the simple fact that the first rule of money management is understand it's your money. It belongs to you. It's nobody else's. It's your money. What do you want your money to do for you? It doesn't matter what an advisor thinks. It doesn't matter what anybody else wants to tell you. And I don't care what book you read or who says what. One thing I've learned in 31 years of doing this, there is no one way to do anything. It really comes down to you. And I tell people all the time, find an advisor who's going to work based on your goals, your objectives, and design portfolios based on you, not themselves, not their ego, not anything else. It's about you, the investor. So maximizing income comes down to you understanding when do you want the income. If you want it now, plan for it now. How do you do that? You may not need a variable annuity, and I know that just sounds like heresy from a website that's called the Perfect Variable Annuity. Variable annuities are a product. They are not the cure-all to end-all. And we'll talk about the riders and the mistruths about those and the fees, all of those things. The key to me is that you buy a product, an investment that fits your goals, your objectives, gets you to where you want to go, and it isn't about anything else. That's the sole purpose of investing. So when you get and you look at a variable annuity, you're looking for tax-deferred growth for future income. I would never, and maybe there's a chance, so maybe 1% of the time you might find a reason that you would possibly buy a variable annuity for something other than tax-deferred growth. And, to me, that's the premise. That's what they were created for. Because if you're going to buy it, let's just put this in perspective. If I have $1 million and I put it into a variable annuity, then what I'm saying to myself is that I'm buying this annuity because I now want income. Well, if the idea of a variable annuity is tax-deferred income for future target date income, then why am I buying the variable annuity now if my immediate need is income? So if I had $1 million and I want income now of, say, $5,000 a month, then you're going to have to figure out how to put that portfolio together. Maybe you take $500,000 and you buy a single premium immediate annuity. Maybe you take $500,000 and you buy a bond portfolio, or maybe you take, you got to mix and match, and now you got to have to build your portfolio to get you to where you want to go. And when you look at maximizing income, when we talk about that with a variable annuity, we're talking about the future, not now. I'm trying to say this as politely as I know how without the yelling into the microphone, but you do not buy a variable annuity for immediate income. That, I think, is very important to understand. I know that they're sold that way by a lot of people, that you can turn the income on whenever you want. That is not the vehicle for what you're trying to do. And I think that's very important that you understand that. So to me, manage the money for growth, convert the growth to guaranteed income. Just like we're talking about, if you put $1 million in, you earn 10%, take the 100,000, convert it to income immediately. But the annuity, the variable annuity is still growing. You converted the growth to income. And I think that's important that you understand the dissemination between that and putting $1 million into a variable annuity and starting a withdrawal, a systematic withdrawal. That's just not the best scenario. The fees of most variable annuities that people buy are too high to overcome that issue. The second thing that I would be concerned about is even if you can buy, let's say you buy a no-load, no-surrender charge, flat fee annuity, and you want to start an income out of it immediately, the benefit of a variable annuity is tax deferral. So you're assuming that you're going to spend less than what you're growing the asset at. In other words, let's say that you only need 5% income, but you're going to grow it at 10. All right, now that may start to make sense. But what makes more sense is taking $500,000 and designing that portfolio, or $600,000, and designing that portfolio, or $700,000. If you had $700,000 and it earned 7.5%, it's going to give you the $50,000. So you could take the other $300,000, put it into a variable annuity, and plan for future tax-deferred growth there. I'm just giving you ideas, just things, food for thought, but these are not cure-all to end-alls, and they're not the perfect system that many people have made them out to be. I put on there, the third step there was to repeat the process. So manage the growth, convert it to income, repeat the process. You manage the growth, convert it to income, repeat the process. It's pretty simple. Manage the growth, convert it to income, and move on. I mean, you keep repeating the process until you die. Then it goes to your beneficiaries. And that, most people want to pass money on to their beneficiaries. And so I think that's why I labeled this video, Earn It, Spend It, and Pass It On. So earn it, convert it, repeat the process, and then pass it on. So make sure it's all set up so that you can earn it, spend it, pass it on, earn it, spend it, pass it on. That comes through the process of learning what you really want. So objective number 3 of a variable annuity is maximize the growth, manage the money for growth, convert the growth to income, and do it again. And then when we get to the point where we leave this earth, that it goes to our named beneficiaries as we want it to do. It's just that simple. So we'll go on to step number 4. I hope that you've benefited from each of these objectives here on theperfectvariableannuity.com.